Hi there, welcome back to the channel. So this is going to be your stock update for today. Try to go over a few things here after I play with this game for a little bit. Yeah, so today it's, it's very interesting and, it, once again, it's like I see certain people out there in the, I have to be very careful, I think, but definitely like the Kev dude just seems to be kind of it seems like a little dejected or whatever. And it's kind of like I'm just I look at my portfolio today and I have some high risk stuff, but I don't have a lot in like, so overall today, yeah, it was a down day. I was down about 0.47, call it 0.5%, you know. So in the scheme of things, it is like really not really a big deal, right? And but yet there's a lot of people out there that are, I think it's like, for lack of a better term, the Robin Hood kids who are just, playing with fire and just do not have enough market experience to realize that they're playing with fire. And so it's rather amazing to me. It's funny because I look at this and, every generation, has to go through their stock market crash. And if you think what happened in March was it, it's clearly not it. Because the reality is that there just wasn't enough pain. I mean, you're talking about, you need enough pain where you're so disgusted with it, you like get out of the market and you stop playing with it. But that's not what we have right now. We have all these people, and it's really interesting because a lot of these people have YouTube channels and stuff too. I mean, people have like they have trading courses, and people are paying money for trading courses for people, to basically get trading advice from people that are, as we speak, potentially really messing things up. And see, the problem is, like I was commenting on this before, we have all these people out there that are like, they're looking at daily charts, and they're looking at like aftermarket, pre-market charts, and they're like out there, and they're like, oh, it's down today 10%, and they're like, oh, I'm going to go buy it. And then the next day it'll be up 10 or 15%. It sort of validates that, hey, they made the right move. But it doesn't validate anything. Like, like winning on one day means nothing, right? What's really happening is a lot of these people are in stocks that are getting killed. Now, these stocks are the high beta stocks, and in the market overall, the market indices are fine. But the high beta stocks, some of those are taking pretty big hits. And you have people that are in nothing but these high beta stocks, for lack of a better term, the Robin Hood stocks, the stocks that are out there on Wall Street bets and all that stuff, and they're taking a hit. And the way I would say it is like, hey, if you have a portfolio and you're sitting there, and if you have a trading, and so basically if you're trading and you were down like 5-10% today, you're probably screwing up. And that would be what I would think. Because the thing is, like, I'm only down 0.5%. The overall market was not down very much. The indices were not down that much. So why in the heck are you down so much? If the indices go down like 1%, why are you down 10%? I mean, it makes no sense. It means that you're really, really highly levered. And that's fine. You can do that, and it's called a drawdown, but you have to really, really pay attention to what you're doing. You can't, the reality is, so let's go into it. Yeah. Okay. Let's go over there. And we're going to share, go over to here, our stock charts. Okay, so let's look at this. So here we are. We're looking at the NASDAQ. Even the NASDAQ today, down 1.48%, 1.5%. Look at this thing. I mean, this is all good. There's really nothing going on here, right? Now, the exception is that you do have to acknowledge that you got to pay attention to the highly speculative stuff, because if it is deteriorating like it seems like it is, then that could be, those are going to be the first to go. The really weak stocks, the stocks that are really high beta, that are going up and down 10, 15, 20% a day, those are the ones that are going to get hit first. All right. And so it is important to kind of understand that. But my counter is, you shouldn't have your whole portfolio in that crap, because if you do, then you're just getting whipsawed. I mean, you're just getting your butt kicked, right? So in terms of watching the market, we need to pay attention to that stuff to understand if, like, hey, it is deteriorating underneath, and that could very well be the case. But let's look at some of our favorite, like GME is really interesting. GameStop is really kind of just being very stable here. It's up 5%, no big deal. But then we had Mr. Tesla here. Elon Musk kind of got kicked in the teeth a little bit. Now, what I'll say is interesting about this one. It's so, if you look at this now, let's think about this. This is Tesla right now. There's certain things going on. This right here, now this is not the 50 over the 200, but this is the 21 day over the 50. And what you can see here is that the 21 day is maintained above the 50 day, and you've had this uptrend, and you can just see it naturally. Oh, it's an uptrend. And then you can see here that we really kind of consolidated. We really stopped going up all the way back in January. We really haven't gone any higher. We just been consolidating, which is fine. And then we started going down. But what's happening here, if you see, is like the 21 days crossing the 50. And so that's kind of a very bearish. It's sort of like a death cross, like the 50 over the 200, the 50 crossing over the 200 to the downside is considered the death cross. And this is similarly with Tesla. That's sort of a death cross. And so and irrelevant to that, you can see that it's been going down. And so now if we just did try to do some trend lines and garbage like that, here you are, here's we're kind of downtrending there. You could also kind of maybe say we sort of have a channel. Yeah, not really, but it's downtrending here. It went, see here, like on this day where it recovered, you can kind of see that, well, it kind of really overdid it, right? It went down extra and stuff. And, but we're still in a longer term, you're still in an uptrend, right? Because you're still kind of above the 50-day. Well, no, you're not. You're below the 50-day moving average, but still overall, let's see. If we go to weekly, chart, then you're still in an uptrend, see? And so now, it's kind of interesting thing to keep in mind, because on a weekly chart, go back to here in 2020, March, yeah, it got beat up, hit the moving average on the weekly. But here's the thing to keep in mind. These are weekly bars. So you had corrections going on 1, 2, 3, 4 weeks before it finally stopped going down. 4 weeks. So we have these people that are like daily basis buying more and more of stuff because, oh, it's down today. Well, how long can you keep doing that? How long can you keep buying something that's like, yeah, sure, it goes up, and it goes up a lot, right? Because when things turn into a bear market, they go up a lot, like on a single day, but then they end up giving it all up. So if you're doing that, it's like a really potentially bad situation. So now let's kind of go to the dailies on some of this stuff. So S hanging in there, but this stock is just like, let's look at Ocugen. This thing is, it's actually fine. Some of this stuff is actually really fine. It's really interesting. Yeah, this guy's up a lot. The Palantir, this guy's down a little bit, What are some of the other favorite fan stocks? Well, I don't know. Apple is kind of lost its luster, People don't like Apple anymore. But yeah, so I think that's really kind of the big picture that I wanted to kind of discuss today, is like, if you're sitting there and you're down a lot today, and I'm not an expert and I'm not giving you financial advice, but if you go to one of our principles and try to be honest with yourself, what's going on? Are you right, or is the market wrong, or are you wrong? And Well, if you're down, you can fight with the market all you want, but you're going to lose. So let's see what all this stuff. I'm going to try to go check out these other stocks. Yeah, because it's kind of interesting. It's not as bad. Like Beyond Meat, okay, it's not down much today, but it had a bad day yesterday. It's what a dog meat stock that thing is. Carnival. Let's risk on a Carnival. Carnival's up. It's doing great. Wonderful. And D.R. Horton, home builder, yeah, it's fine. Facebook, yeah, you know, these things, like if you look, it's funny, like Facebook, you know, like it hasn't gone anywhere for a long time. I mean, it's just been kind of range bound, really hasn't gone very far. And now it's breaking all your moving averages onto the downside. Not really high volume, but it's just certainly a place you probably wouldn't want to be. This guy's not doing much. I guess it's not really a bad, there isn't as much movement today. You get a better idea what stocks are moving. Peloton, what's this? Well, Peloton got hit today. Interesting, down 8%. So this stock is just like basically a mess now, you know, and it kind of had distribution. The volume picked up, not a super high volume day, but it did pick up. So, yeah, that's interesting. So like if you're in Peloton and you're like, oh, this was an opportunity to buy some more. No, it's not. No, this is totally just going down. It's in a downtrend right now in the short term. It's got to find a base. You know, it's got to find some kind of you got to find some kind of technical pattern for it to show you some support, you know. So I don't know why people are out there and they're just like in the middle of the day, oh, buy more, you know, you're buying at 110, 120, you know, there's no reason this thing couldn't go down to 80 or 90. And there's no reason that it couldn't go down to 80 or 90 base out and be a great buy to make a double 2x on it, right? So we have to start getting away from this nonsense that, you know, you pick like, I mean, it's amazing. I just see the Kevin dude is just constantly he's picking prices like, oh, this stock below this price is a buy. And he's doing that kind of crap. And I'm telling you, like I was telling you before, like I had a friend, like he got wiped out by, it was either JP Morgan or someone like that, just wiped out with that kind of thinking in the tech thing, because it was the same kind of crap. It's like, hey, oh, it's an opportunity to buy. You know, this was an opportunity, right? No, it freaking wasn't. You're below the low of that tail. So, you know, you buy it there and you think you're smart and you look smart for the next few days, but then you're down. And now you're like, oh, well, now it's down here again. I'm going to buy some more. Okay, fine, buy some more. But you have no idea what's going on with that. So I'm amazed because I just see like, yeah, this is it. I think this is really it. I think this is the millennial generation getting screwed over by the stock market. I think that's my conclusion, because, you know, you guys just don't know what, and it's amazing because like, I don't know how some of these guys, like the Kev dude has, like, he's got a trading course. Like, did you consistently make money trading? Or, I mean, like, what the hell, you know, what are you doing? Like, I mean, if you're going to have a trading course, like, you have to, like, don't you have to consistently make money for like a decent period of time? Like if you've been, oh, I've been trading for 2 years, 3 years. Yeah. So what good is that? Is that any usable experience in the big picture? No. I mean, you'd be trading 10 years, even, you know, all the way back in 2010. What would you do? What did you learn in all this time? You learn nothing but buy a dip and keep buying stuff, and you make money, and it all worked. And then there'll just come a day where it's not going to work and you're going to get wiped out. I don't know. Too much. So yeah, what was I thinking of? I want to look at, I'm going to go over here. So actually interesting is I think the beta stocks are kind of slowing down a little right now. I know I'm blocked out the screen here. Sorry. Dang it, stupid thing. What are some of these other ones? Fubo, Neo, FUV. Let's see. Yeah, I don't really know. Oh yeah, I had a chart list. That's right. I had a chart list of high beta stuff. I don't know how high beta. All right, AMCC down 4%. I mean, if you're sitting there in freaking AMC, pardon me, at like, you're really lucky that it hasn't gone down worse. I mean, this is like, it's amazing how well it's holding up there. Same with GameStop. It's like, you're kidding me. AMD getting beat up. It's probably just overvalued, but it's a real company that does stuff. There's Amazon getting beaten up. Once again, another company it's a real company though. What are these guys? I don't know what these guys are. These guys, stuff getting beat up a little bit. Oh, this guy, Churchill, down 12%. This just, yeah, I think this is the one that dudes are like buying more right now. I don't know what planet you are buying stuff. There's nothing to buy here. There's nothing. Technically, this is a disaster area. Look at that thing. It's like closed right at the 50, and it had an update. Its distribution right into the 50 is down 12.8%. It's like, if you're buying any here, like you're going to wake up and it's going to be gap down 100%. You're screwed. Like, you got to have a pattern. You can't. The problem is, if you found like an intraday pattern, you find a box or something intraday, that's fine, but you got to sell the damn thing intraday. Like the thing is, like, if you can do an intraday buy, yeah, but to help you get a better situation on a daily setup, if you're going to hold it for a couple of days, like if you have a good setup on the daily and then you get a setup on the intraday that can pan into the daily, that's fine. But there's nothing there. There's no reason to buy that stock at all. Here. There's nowhere in the last week and a half. All these bars, there's nowhere in there that made any sense to buy, yet people are buying it. And you're gambling. You are got better odds in Vegas, baby. I'm telling you. The hell? Chipotle just getting beat up. I don't really know why. Salesforce getting beat up. CVS stable. Disney stable. DocuSign a little beat up. Yeah, and like I was saying, like there's this kind of thing where people think they're diversified, and there's all kinds of different diversity. Like if you're like playing in a certain group, if you're like in a certain trading group or whatever, whether it be Wall Street Bets or something like that, or you hang around the same people, and you're all in the same stocks, you're not diversified because you're all kind of like in the same stuff, and so you're in this high beta stuff, you're screwed. eBay getting a little hit. Enphase down 6%. Yeah, and look at this thing. Like, this is another one I think someone was buying. It's like, what the hell are you doing? You have a death cross. You have the 25 now significantly crossing over the 50 to the downside. And this is a perfect setup. Up in here on this day, this is a perfect setup to short the damn thing. Because it's like, look, couldn't make it back over the 50, and now it's going down. And sure, maybe it's going to find a home somewhere in here. Next support is somewhere around where this low is. And then you got the next moving average at 150 isn't really real, the 200-day. So your next support is like, if it breaks through this point here at 140, your next support's 110, maybe 120. Like, okay, you want to ride that? Etsy just getting the crap kicked out of it. High volume distribution day, crap, It's like, and of course, this would have been one that, if you're a longer holder, then, maybe I would, still be holding on, because I'd be like, okay, yeah, I've got plenty of thing. And it's above the moving average. It's above the 50. And so it may be, something that you would be hanging on. But if you had just recently bought it, you bought it late, then you're a weak hand and you're in trouble. Okay, EXPI getting hit too at 13%. See, now I'm getting into all the stocks that the Kev dude is like. And once again, here is actually another perfect short type setup. When this bar failed there, it came up and, came up high and then boop, goes low. That's just like kind of a setup. And it's at the 21 days, but it's still above the 50. So it's high. It's sort of risky to short because you expect support at the 50 possibly. But still, it's kind of like that setup. It failed, it failed to keep going up. And so that's always a negative sign. Facebook, FedEx, nothing much. Fastly, I don't know what that is. Fisker, the magical Fisker. So this thing, Yeah, there's been some really big, heavy accumulation in here. But gosh, it's just so volatile. Today's down 13%. And here's the thing, like if you were in there like, oh, I bought it today and you found something, like you're in really deep guacamole. You like stepped in dog poop. It's like, look, there's no support underneath this. Where is the next potential support? It's got to be a moving average. It's got to be a low. It's got to be something where you had a swing low that, you know, offers some support. Where is the next support? Maybe at the 21 day. No, I mean, it's just too extended. So not there. Maybe at the 50, maybe in this gap, maybe in here, 18, 19. I mean, you're talking, you got like 10, almost 10 points to drop. And where's the real support? Maybe at the bottom of this low here. You know, so you know, that's the thing, you're buying in here and you're thinking, oh, it's great, like it's going to start going back up, and then you put these imaginary price targets on it. Like, you freaking kidding me? It's not. It's only worth what someone's willing to pay for it. That's all it is. And the problem is, like, especially these companies that, like, they're not going to make a profit. They may not make a profit for 5 years, and then even then they may not make a profit. So you're buying all those earnings now, you're paying for it now. Fubu, this is one I had looked at in and because I had seen it over here where it was kind of like maybe going to hold support, and it never really did. And then look at this. This is a, what do they call that? See that? It's not a hammer because the hammer's on the bottom. It's like a hanging man, they call it. You know, look at that. Look at that bar. It like gapped up, and it's got a gap. It's sort of an abandoned baby top or something like that. It's like basically you have this. It went up here, couldn't sustain. It closed near the high, but then it just gave it all up today. So that's a disaster. Let's see, come on. Okay, hello. Come on, dude. All right, let's see what else we got. Let's go to Lee. Crap. Well, Lee, here we go. Here's another stock that, well, it's downtrending now. Once again, you've crossed over 20 over the 50, going down. Why are you buying it? Don't buy it. Lemonade, another one. Why are you buying it? Maybe did some after hours? No, not really. Not really. Low. Lululemon, look at that, getting hit. See, now when I was looking earlier at the charts, at the indices and stuff, I could look at it and say, hey, this is not a crash. This is not a big deal. But now when I go into the high beta world, where I'm looking at all these high beta stocks that all you YouTube people are looking at and going crazy over, yeah, if you own all this stuff, you're in deep crap. You'd be down 15, 20% today. Look at that one get hit. So I get the pain. I feel the pain that you're suffering, but you're suffering because you're screwing up, you're effing up, and that's the number one thing to learn from it. Like when you go into the stock trading and you make these mistakes, and you're gonna blow out your, you're gonna blow out your account, and you're gonna lose it all, right? And when that kind of stuff happens, it's not the time. It's the time to consider that, like, you went to school and you paid tuition for that. You want to learn from it. That's what you want to do. You want to learn, like, you need to go through what you did and figure out where the mistakes were made, what you did wrong, because that's what you have to do if you want to learn. If you don't, then you just set up to fail again. And most people do is they kind of just stop trading altogether. And in a way, I've stopped trading too. I just have a very little bit. I am just really just an S&P kind of guy. And I just have a little bit of hedge on and a little bit of gambling, and that's kind of it. And then the rest, I'm just kind of just trying to sock it away. And I don't know if I'll have to make a change there. I may have to. I mean, I'm not going to, if this turns into an absolute rout, I'm not going to just sit there and take it. That's for damn sure. But I have some hedges in there so that I should, basically I won't get totally cleaned out. And it's funny, I say that stuff, and people probably look at me like, you Robinhood kids look at me like I'm crazy, but you get cleaned out in this stuff. Look at Snowflake, 8% down, Spotify, 7% down. Square getting beat up. See, it doesn't matter. You know, it's like this is like a real company. I mean, they're doing stuff, they're selling stuff. I don't know if they're making a profit, but they're, it's a real company compared to some of these other ones. But still, it's like, you got to understand that the price to earnings that people are willing to pay just changes. It changes a lot. And you have to understand, like, sometimes with this stuff, when it's getting hit, it may be the big guys getting hit, because if they're getting margin calls on this stuff, just like that whole thing that happened with the Robinhood preventing trade buying on GameStop, they were like overextended on margin. I mean, it's a different situation, but the point is, if you're sitting there and you have margin and you have a bunch of these kind of stocks in your account, what is the broker going to be thinking? The broker is going to be thinking like, hello, all your crap went down 20% today. And they're looking at it saying, this is all crap. Hello, you need to post some more money ASAP. And so that's where selling begets selling, and that's why it happens. And it's always so funny. And it's always so sad, because what they'll do is they'll go on all the networks, they'll go on the financial networks, and they will tell you over and over again, they'll tell you like, buy and hold, don't panic out, the pros, this is when the pros get in. And that's all BS. That's all BS. The pros are the ones selling. They're the ones getting the hell out because they're overextended and they're getting the margin calls. And that's why you're getting the heavy volume selling, because they're like, oh, and they don't have a choice. They can be like, the day's going to come. The day's going to come where ARK Investment is going to have to sell stuff that they're like, oh, we would never sell it. And they're going to be like, oh, no, you got redemptions coming. Oh, you got margin calls coming. Oh, you're going to sell it. You're going to be told to sell it, and you're going to sell it. So these people are very highfalutin, and there's a generation of people that like have not suffered the pain. And Upwork, another just Wayfair, Walmart. See, Walmart, solid. This is a real company. I mean, and this is all good, but they're going down for whatever. I mean, what's happening? Did the earnings go down? Maybe the earnings went down, whatever. But the other thing is they're deciding to pay a little less for those earnings. You have to understand, like, every stock you're buying, you're paying so much for these earnings. I mean, don't you understand? Like, if I go buy a laundromat or something, or I go buy a deli next door, and I go and I can look at, like, if you go through a business broker, whatever, you're not going to pay 20 times earnings. But 20 times earnings is like a cheap stock these days. You're paying 100 times, 200 times, you're paying infinity since they have no earnings. Like, it's just all because of all the funny money floating around out there. Now, Zoom, this one is an interesting one. I don't know. It just got the crap kicked out of it. Really high volume crap kicked out. But on the bullish note, it really held this low. See that? If you're looking at where might support come in, hey, here and here, it had held that low. And so that might be, something that will hold, but you never know. So yeah, so in conclusion, this is not a crash. If it's a crash for you, then you're doing something wrong. All right, that's it for this one. Bye.